Good day, Inderes TV viewers and listeners. Let's discuss about Sampo's first quarter results with Group CFO Knut Arne Alsaker. Knut, thanks for having me here.
Always good to have you here. Thanks for coming.
As usual, Sampo had very robust results, but what's new, you changed your reporting structure. So weaving the results through this new reporting structure, what have you tell to investors?
Well, not directly related to Q1 results, obviously, but the new reporting structure very well reflects how we run the business. We run the business with a focus on our customers. So we have 4 main segments, which represents that. The private business, which is split into Nordic and UK, the main part of our business, and then a commercial segment and an industrial segment. And then we report in investments and financial net financial result as a group result, only because it is a group matter and not directly related to the dialogues and business we do with our customers.
And the actual results were quite robust, and I think you zoned up a bit your guidance as well.
We did. The first quarter reflected the value we create from organic growth with healthy top-line development, 10% reported top-line growth year over year, 9% adjusted for currencies. We improve our underwriting results significantly by 30%. Which also is due to the fact that we had a much more benign winter quarter in this year compared to 2024. And taking that into account, as well as the upgraded synergies from Topdanmark, which adds 14 million euros to the 25 result, we upgraded our outlook for the underwriting result by 50 million euros.
Can you explain what explains the difference between the headline inflation? I think in the Nordics it's something plus 2%, but claims inflation is almost double that. So what explains the difference, and do you see that the claims inflation will settle down to the level as the headline inflation is?
Well, claims inflation and CPI is 2 different things driven by slightly different factors. From time to time, claims inflation is higher than CPI. From time to time, it can also be lower, and it varies from product to product and market to market. Obviously, what we need to price for is the claims inflation, because that's driving the costs and claims we pay to our customers. Over a longer period of time and on average, they will be fairly equal, but on a shorter term basis, there can be variations, which we've seen lately in some of our markets and for some of our products. What obviously happens to claims inflation as well these days is that it's trending downwards. That has gone for all the markets that we operate in. So it's a quite different claims inflation we have, for example, in the UK now and in the first quarter compared to what we had a year or 2 ago.
Just to remind investors, what are the main drivers behind claims inflation?
Claims inflation, the drivers are salary inflation and service cost inflation, which is an important part of managing claims, as well, of course, of spare parts and building material, so physical stuff, which we use to fix claims.
You also found new synergies with Topdanmark, and you upgraded the forecast how much synergies you will get with the Topdanmark integration. And I think you know Topdanmark very well. So were your previous guidance or thinking, was that just Sampo style, very careful when you communicated that outside, or what has happened?
I think it's good to be careful when making estimates for the future. None of us have a crystal ball. But of course, what we did with the previous estimate was to do that outside in. We've owned Topdanmark for a long period of time. We knew and know the company very well, but it was still an outside-in estimate since we didn't have the key to the doors of Topdanmark yet. Now we have that and have been able to do a much more granular and sort of an estimate from the inside of the company, and obviously from the inside of the ongoing integration process, which is going very well. And that has driven us to feel comfortable with upgrading the synergy estimate from the 95 million euros, which we announced last June, when we announced the proposed transaction at that point in time, and to the 140, which we talk about in our report today.
If we think about competition in Denmark in particular, but I think this also applies to other Nordic countries, recently Danish authorities released a report where they said that the market might look somewhat uncompetitive, or if I loan the word Torbjörn used in your first quarter results, he described the market as rational, but I think from consumer perspective it's something else than rational. So how do you view those regulatory statements, and do you feel there are any consequences for Sampo or other insurers?
I think we are very comfortable with how we operate and compete in Denmark. We're not worried about the competition authorities' report or any investigation that might happen. That has happened before in some of the markets we operate in, like in the UK, for example, a couple of years ago in Sweden as well. And the outcome for us, take again the UK as an example, I would say was positive. A core part of our strategy is to treat customers fairly. So that is the basis we compete on. And the so-called JIP reform, the pricing reform in the UK, actually made us more competitive because we already treated customers fairly. So our propositions in the UK became more competitive compared to what they previously had been, which also shows in the results we have and the growth we've had in the UK since then, also in the first quarter. So there's absolutely no worry from our side in terms of an investigation into competition in Denmark.
Okay. If you move to UK, recently there were, I think it was a Belgium, insurance company from Belgium that acquired a UK insurance company, and they and I think other players, Sampo as well, see that in the long term UK market will consolidate. So I have a few questions about it. In the long term, I think UK market is now quite fragmented. Maybe you could remind investors how fragmented the market is, and do you see that it could develop into something similar like Nordic markets are today, like very concentrated markets?
Competition in the UK as in the Nordic is fierce, but I agree on the term rational. The competition is rational, where you have competitors pricing for the risk factors they see in prices in the UK has dropped over the last few quarters, but so have claims inflation, so have some of the effects that the rates you use for discounting of claims reserve in the UK has changed to be slightly higher, which is positive for the cost of claims. You've had lower reinsurance prices, a number of factors which actually have made it rational to reduce prices somewhat without eroding margins. You can see that also from our result this quarter, which absolutely indicates a healthy margin in our UK business. But in terms of the market as a whole, it has changed over the years. Some of the players that were active in the UK markets 10, 15 years ago are not there. And recent consolidation is consolidating the market further. And we look at that as positive. The companies that have done the couple of acquisitions we've seen lately are big, skilled, competent P&C insurers, where you have P&C insurance as a core part of their strategy. And we believe that that means that they will need to do similar thing as us, focus on pricing risks right and secure long-term profitability, which of course is also positive for the market as a whole in terms of continue to be rational in pricing insurance products.
So in terms of pricing, consolidation is net positive for Sampo. And the second question, on the other hand, Hastings is still quite small player in the UK market, and I think we've seen in the Nordics that if you stay small while others consolidate the playing field, that might not be the best position. So what's your take on Hastings' competitive position if the market consolidates more and you don't do any add-ons or buy any other companies there?
I think you're a little bit unfair when you call us small in the UK. We have more than 4.1 million policies, which means in terms of policy count, we are as big as we are in the Nordics. We're a top 5 player in this big UK market potential that we have. We have the scale to make all the investments that we need for the future. And we certainly have the scale to compete with those companies that are bigger than us in the UK market. So in terms of securing a competitive position for us that continues to drive value from the growth that we have, we don't need to do consolidation. So in terms of just the size of our business compared to what now recently has happened in the UK market, we're not worried.
Okay. I think insurance has some like scale advantages, but do you think that if you reach a certain absolute scale, then it doesn't matter anymore that much thinking about competition? But I think for very small players, that might be an issue.
And I mean, the problem with very small players is that they have to do some of the same investments in technology, for example, as we do. And that constitutes a much bigger cost base compared to the premium income that they have. And then you have the fact that the bigger you are, the more you know in terms of the risks you are considering taking on your balance sheet, right? You have just more data. So the value of your data lake is much bigger if you have millions of customers compared to thousands of customers.
True.
Yeah, but not least in the retail market, right? It's the law of big number. The bigger you are, the less you can sort of mess up because you use all your history and experience to do the right thing.
Maybe one more question. I think actively you look also for acquisition targets in the UK, but does this recent acquisition indicate that the competition for different acquisition targets is quite high, or the price tag is very high for acquisitions?
Yeah, I mean, we always look at potentials that are in all the markets that we operate in. And then, of course, there is a business case in terms of the couple of recent acquisitions that has happened in the UK. We didn't have an interest. I mean, we sort of didn't compete in a bidding process for those two assets. So I think we're super happy with what we have, super happy with the organic growth that we have, and the fact that you have certain players that pay a certain price. If you call that price high, that of course just will reinforce further the need to create profit and value out of the acquisitions they have made, which sort of is a little bit prohibitive in terms of doing crazy stuff on the pricing side and losing money, obviously.
Thanks, Knut, for interesting interview. The next time I promise I correct my view about Hastings' size in the UK market.
Thank you.
I'm looking forward to the next interview.
Likewise. Thank you very much.